Welcome to Mex Moves, our weekly podcast on Mexico business and finance. How are you, Eduardo?
Doing well, Damian. How are you? How is England?
A little bit sad, obviously, after our ignominious defeat yesterday to Argentina, but such is life. So this week we have a great interview with Ana Cristina Gadala-Maria. Ana Cristina is a principal at QED Venture Capital Fund. She's focused on early stage fintech in LATAM. She's from Guatemala. Now, QED, as many of you might know, is probably the most important fintech investor in the world. Just in Mexico, they're early investors in Konfío, in Kavak, in Covalto, in FEMSA's new lending business, in Bitso, Félix Pago. They're only about 13 people, so they have an outsized impact. And Ana Cristina was one of the people there that looks at the Mexico investments. Before the interview, Eduardo, I think we could talk about some of the economic impact of the World Cup, which now that it's finishing, some data that's come out, which I think is interesting. We can also talk about the airlines. Also, some of them have reported second quarter earnings, and some of the airports have, and they're also clearly impacted both positively and negatively by the World Cup. I have some Wall Street reports on AI infrastructure opportunity for Mexico, and then I think we can talk about this report that Mariana Mazzucato, Italian-American economist who's been hired by the Mexican government to help them think through the implementation of Plan Mexico, and she delivered the first sort of version of her report and was interviewed in La Jornada. She's a sort of heterodox, economist that is, widely admired in Cuatro circles, we are told. So, shall we get going with the World Cup? So, an organization called Concanaco put up some numbers saying that the World Cup helped generate 50 billion pesos, maybe $3 billion of economic impact. Doesn't really define what they mean by that. They originally thought it would be 65 billion pesos. So whatever they mean by that, it's less than was originally anticipated. Apparently 35 billion was attributed to tourist spending in Mexico City, Guadalajara, Monterrey, and the rest, consumption, food, beverages, entertainment, televisions, match-related activity. Hotel occupancy wasn't much higher than in previous years, but the tariff was up about 120%. So hotels made more money, even if they didn't fill their hotels much more than in the past. Now, what's interesting, I thought, was we also have quite a few indicators of June consumption. The World Cup obviously started in Mexico City on June the 11th, and the June numbers have all been pretty weak across the board. So ANTAD saw same-store sales fall from 1.6% year on year. That's the first negative ANTAD same-store sales, in over a year, and total sales barely increased. And supermarket sales were down. Department store sales were down. Same-store sales for department stores, 3.7%. Normally they do well in the World Cup because people buy giant TVs, but it seems that it must have bought them beforehand or already had them. But it wasn't a good month. Also, INEGI published its monthly indicator called the Timely Indicator of Private Consumption. That was a bit better than ANTAD, 2.6% growth in June, but still relatively modest, and definitely not consistent with a kind of World Cup boom. Now, I think one of the differences, and Enrique Quintana had a column on this, between ANTAD and INEGI, which is worth bearing in mind, is that ANTAD is becoming less and less relevant because it doesn't incorporate e-commerce, which has obviously been grabbing a bigger share of retail sales, and it doesn't incorporate hard discounting, especially Tiendas 3B and Neto. which have also been growing very fast. They also don't incorporate Walmart and Oxxo, but they haven't done that for a while. So you could argue that as long as Walmart and Oxxo are relatively stable, missing them doesn't mean that the growth rates are being underestimated. But there is a problem with hard discounters in e-commerce because they're growing so much faster. So ANTAD numbers probably are overly bearish for those reasons, but the NECI numbers aren't much better. So we didn't get a World Cup consumption boom in June. It seems, Eduardo.
Yeah, it's some of the numbers ratify that perception. Damian, the Mexico City airport, which was expected to receive a large number of travelers, registered a decline in passengers during the month of June, which partially already World Cup fever. I mean, the last game in Mexico was on July 5th. So most of the previous games that took place either in Guadalajara, Mexico, Monterrey, were in June. And in June, Mexico City traffic declined, mostly by domestic. The domestic element of the equation dropped 4.5, but the international only rose 1.5%. So again, the number of people that were expected to travel to Mexico didn't match expectations. We had talked about it before, I think, on a report that you quoted from Deloitte that laid down the impact of the World Cup in terms of numbers of people coming to Mexico, and therefore in the impact in consumer spending and all that. Aeromexico also reported not so brilliantly in the second quarter of this year. They said that the fact that they had to charter some planes to move some of the teams around the country that played in Mexico lower their revenue compared to what they were getting before. So we have that data also verifying that the expected boost that Mexico was going to get didn't materialize. Now, on an anecdotal level, I did go to see a few matches on restaurants, and they were always very crowded. People were consuming, but a little anecdote doesn't translate into a macroeconomic picture of the impact of this massive world event on the Mexican economy. And so I think it's fair to say that at least it didn't match the expectations that were created before the World Cup began.
Agreed. I mean, Aeromexico said that there was actually a negative impact for them because business people stopped traveling in June, and that's where they get a lion's share of their revenue and their traffic. So their argument was the World Cup was a negative event. In addition to that, you got the impact, still the kind of impact of the Mencho killing in February that hurt some tourism, especially in Puerto Vallarta, which reported at the airport level, very, very bad numbers. I think revenues were down 20% or so in June. And then you've got the Middle East conflict, the war in Iran, which led to higher oil prices and therefore higher ticket price costs, which depressed demand. So it wasn't all bad for Mexico because they were, even though their passenger numbers were down, which is what we've been focusing on, like 3%, I think, in the quarter, revenues are up 13%. So they hiked revenues to partly offset at least the increase in oil prices. And they were also able to move a higher share of passengers to so-called premium revenue. So premium revenue reached 43% of total revenue, which is astonishing, a high number versus 40% last year. So Aeromexico is sort of positioning itself as a premium airline, less traffic passengers, which isn't a problem if you can get them to pay more money. The margins were depressed because of the higher oil prices, but they guided to a much stronger second half of the year, assuming that oil prices would fall, obviously with the conflict in Iran starting all over again. maybe that assumption is going to turn out to be too rosy. Also, Gap reported the airport for Guadalajara, Vallarta, Tijuana, the Pacific airport. They also had a similar sort of story. Their aeronautical revenues were down 3%, reflecting negative passenger growth, but total revenues were actually up about 4%. And they were able to make more money from consolidating CBX, the bridge from Tijuana to San Diego, more money from parking, hotels. So they're becoming less of a sort of classic airport that depends on passengers and more of an infrastructure company with very diversified revenues stream.
Correct.
So do you see, Eduardo, that Nu finally became a bank?
It did. I did see it, and it took a long period of time. I think, if I'm correct, they were searching for this licensing for almost 3 years. So Nu joins other new fintechs that have switched or are transforming themselves to fully operating banks like Open Bank, Hey Banco, Banco Plata, Walla, Bieno, and Revolut. All these banks, included, it's quite interesting because they offer their financial service through digital platforms and without any bank branches that we have been grown used to attend and go to. So it's a milestone now for Nu that they got the license, and when they did, they reiterated that massive investment figure that we've talked about, the 4.2 billion, which obviously includes operating expenses, not just capital investment, but nevertheless, it's what they are bragging about. Now, they have yet to announce what are their first products as a fully licensed bank. What will they do now that they have it? But most likely, they are going to focus in attracting payroll accounts and the associate payroll loans. As a bank, Nu will be able to offer the whole gamut of financial products, chiefly all types of loans that are now available in Mexico, and has around 15 million clients to service with this new license. So they do have the numbers to become effective and grow. That 15 million is, I think, the largest client base in Mexico's financial sector. And currently, with the previous structure that it had a loan portfolio of around $1.8 billion, which made it the 14th largest which will make it the 14th largest bank in Mexico, which has around 50 banks, more or less. So kudos for Nubank. The story has to be written yet, and we'll have to wait and see how they operate in this new environment, which requires all sorts of new regulatory elements that they'll have to take care of as they move forward.
Yeah, I'm a reasonably happy new customer, and I think what they're doing for the financial sector in Mexico is great, which is giving people a better yield on their deposits and simplifying use of a credit card, even if the credit card itself is no cheaper and actually more expensive than if you don't pay off on time than the incumbent credit cards. That said, David Vélez said Nu is the third largest financial institution in Mexico, which is like by almost every metric that is an untrue statement. They're 14th by deposits, probably 18th by assets, probably 20 to 25 by loans. So from the metrics that matter, they are very far away from being the third largest financial institution. He, as you suggested, is sort of focusing on this 15 million number. BBVA clearly has more, Azteca probably has more, Coppola has more. So I don't even know if a lot depends on how you sort of add up contracts or add up clients. You might have one client with more than one contract, but even if they're sort of 3 or 4 by contracts, if this contract has no money in it, it's not meaningful. I think the way to look at it is deposits, loans, assets, and they're in the middle of the pack right now, which is impressive considering they've only been around as a Sofipo and before that as a Sofom for 5 or 6 years. So kudos to them, but not necessary to start going around saying they're the third largest financial institution in Mexico. I actually think it undermines trust and credibility, which is what a bank should be seeking, by making claims that don't add up. And as you say, there's now a lot of competition, which is great, both in the fintech world, with the Revoluts and the Platas and the Hayes and the open banks and Voila and so on, but obviously more importantly from the incumbent banks, BBVA, particularly Banorte, that have upped their game when it comes to their digital products. So it's going to be a challenge now. As a bank, they're going to have more costs. They're going to be supervised more closely. They're going to have higher deposit insurance, which for some people is relevant. I don't think it's that big a deal because while as a bank has way lower deposits than Nu, that's a Sofipo. So I don't think people really read the small print, but I guess eventually it's necessary. I mean, Nu itself is about 60% of all Sofipo assets. So this is going to sort of reduce the Sofipo presence a lot. And now, as you say, they're probably going to go into payroll loans. They're probably going to offer investment products as a bank, at least through the bank entity, unless they find some kind of waiver. They won't be able to offer crypto in Mexico. But I think their ambitions are great, and let's hope they and the other digital banks get a better deal for Mexican consumers. Especially, let's hope that eventually this leads to lower interest rates, which it hasn't really done so far on the credit card product, and continues to offer attractive rate on the deposit side.
They'll have to offer something that is attractive in order to compete. So yeah, the story is just beginning, I would say, and the main thing is that this will translate into a more efficient financial and banking system for us, the consumers, and that's the goal, I guess, when you have more players. So let's keep our fingers crossed that will happen with them and Revolut and the Platas and the others that are coming, challenging the incumbents, which is not easy.
Yeah, I mean, the elephant in the room is cash, right? Because if you don't have any physical branches, it's not easy to provide cash to your customers, or expensive to provide cash to your customers. So it's difficult to operate in Mexico without cash. I'm right now, as you mentioned, in England, and basically I've had no cash in my wallet for a week, and it's been a non-issue. But in Mexico, it's very, very difficult to do that. So if they want and they need to be the so-called principal bank, and the question is, can they achieve that without offering in a cost-effective way cash to their customers? We'll see. And I think for that to happen, you're going to need a government that is really committed to digitalizing payments in Mexico. And we haven't, with a lot of talk about it, but we haven't really seen much significant movement from the government. Gas stations right now are not paying interchange, and there's a few measures here and there, but nothing very, very transformative that I think is required. And according to different studies, transactions less than a few thousand pesos, 85% or so are in Mexico.
I mean, I've seen a few changes. When I was in the States, I didn't see a dollar for a long time. I mean, to be honest, I mean, you never did. You paid everything with your credit card or even the bus, whatever. So you do now a little bit in Mexico, but there much more needs to be done. I've seen improvements. I've seen people using mobile devices to charge you that I hadn't seen before, which is good. But I guess outside of Mexico City, it's even more difficult not to be without cash.
So AI infrastructure. I was sent some Wall Street reports over the week about how, and it was suggested that I mention this, how AI infrastructure is proving to be a huge opportunity for Mexico. So Morgan Stanley is estimating globally $880 billion of capex in AI infrastructure in 2026, and that's going up to 1.3 trillion in 2027. So the idea is that Mexico could get a small part of that would be transformative because Mexico exports, let's say, 800 billion to the US. So they think that exports could on AI infrastructure could exceed $120 billion and very soon overtake autos as the biggest sector in Mexico. And Bradesco BBI also put out a research report. My friend Ramos, he has a sort of Silicon Bajío thesis that Mexico is becoming a strategic manufacturing platform for infrastructure surrounding AI. What is that? That's sort of for the non-technical people like me, servers, transformers, cables, cooling systems, storage, industrial buildings, power generation, and so on. That's got to be made somewhere, and Mexico is a good place to make it. And you're definitely seeing that in exports to the US, which are growing at sort of 30-40% in this AI infrastructure category, while autos are basically flat to down. Morgan Stanley also says that some of the analysis that claims that there's very little value added in this. You're basically just importing a bunch of stuff from Taiwan, doing a little bit of sort of assembly in Mexico and then sending it to the US isn't really true. They actually argue that the value added per worker in IT hardware is 20 to 40% higher than in autos, and that it's more white collar. And then there's kind of a lot of knock-on effects through energy and water that would require investment in those areas, which would also help growth. In fact, they even raised their 2027 growth forecast for Mexico to 1.9 from 1.7. I think partly because of this boom having a real impact on GDP, not just kind of light assembly. And as these are stock analysts, the recommendations naturally are to buy sort of industrial parks that are quoted in the stock market, where a lot of these infrastructure is being made. So this isn't building data centers in Mexico, which itself is an opportunity, obviously. It's more building or manufacturing the plants or assembling the parts to provide the necessary infrastructure to all these data centers that are being built in the US. It's happening in Guadalajara, in Ciudad Juárez, Chihuahua, Tijuana, Monterrey, Querétaro. Those are just Chihuahua and Jalisco are about 60% of Mexico's AI-related electronics and electrical exports. And Querétaro is clearly the home of the plurality of data centers in Mexico. I think roughly one third are in Querétaro, and those will also have to be buying all these parts from these manufacturing facilities that are springing up to provide for the data center and AI boom on the infrastructure side.
And I think, Damian, in that sense, the Mexican government has a clear view that that's an area where they could even increase that value added element that you mentioned with greater production in Mexico of some of those parts and components that these products need, and the energy sector as well. I mean, that's why they're desperate to get more investment in that area. So I hope they do it. I mean, that's the essence of the Plan Mexico, to source more locally parts and components. So we hope that they can accomplish that. There are a lot of obstacles probably, but if they can solve those issues, and I know you're going to talk about what this economist had to say about Plan Mexico, but it's a good idea. The execution is key, like always, and the numbers are giving it a clear-cut reason that this could be a very powerful element for Mexico's growth for the future. So I hope they do.
So Mariana Mazzucato, she is born to Italian parents, but I think very young moved to the United States, studied mostly in the United States. She's considered an Italian-American economist, was hired by the Mexican government to sort of design the implementation from a theoretical point of view of Plan Mexico. She's a proud sort of heterodox economist. Went to the New School of Social Research in New York, which you're probably familiar with, Eduardo, and now she's a professor at UCL in London, where my daughter is currently doing a master's degree. And anyway, she has this 88, 90-page report, Transformación del Estado para el Plan México, un enfoque basado en misiones para alcanzar una prosperidad compartida. So she's got this thing, which I don't totally understand, about missions. The government has to have these missions on improving water, improving healthcare, which obviously we're in favor of, and public policy should be sort of geared towards achieving these missions. Now, I think that her basic, as far as I can tell, her basic kind of thesis is absolutely spot on, which is that in order for Plan Mexico, to work, you need a state that is effective in executing public policy, right? Because if you're handing stuff over to the government to do and to design and to plan, you need a very competent government. And the general sort of message from the press reports, some of the extracts I was able to read, is that she thinks that the Mexican government is too weak to effectively implement the Plan Mexico. Now, and I think if you went and looked at the Tren Maya or the Dos Bocas refinery, I think you'd probably conclude that that is very astute analysis. The Mexican government isn't good at planning these big infrastructure projects or getting these missions accomplished. So I think the problem is that, from my perspective at least, is that she thinks that money will solve this problem, and that we need a sort of fiscal reform, and we need to give more money to the state so that it can achieve these missions. And I think that the problem is much deeper than that, because the money, the $20 billion that was spent on Dos Bocas, there was a lot of money. On Tren Maya, there was a lot of money, but it wasn't well spent. So I think before giving more money to the state, you need to change the incentives so that it acts in a way that genuinely maximizes public welfare. And one of her other recommendations is coordinating, which I guess no one is against, NAFIN, Bancomex, Banobras, Fonadin, so around all these missions, so that we'd have. She loves what Brazil has done on this, where it has much more powerful state development banks. She's also done some consulting for the Brazilian government. Again, there's been an awful lot of misallocated resources coming out of the Brazilian state development banks. At one point in my life, I was an equity strategist for Brazil, and I used to look at this, and the fear, of course, if you create these giant state development banks, that they're going to misallocate capital to projects that don't have a net present value. And then the other thing, and finally, is she's very against austerity. She was interviewed in La Jornada. She said it's one thing we can be sure about is austerity doesn't work, whatever that exactly means, and that public infrastructure spending should be sort of taken out of the budget, and because it's it's going to theoretically at least generate returns in the future, so it should be separate to consumer spending. The problem is that it's not always the case, right? As we've seen with some of these white elephant projects in the previous government, they don't always generate a positive economic return. So assuming that they will is perhaps overly optimistic. And secondly, they are clearly financial obligations of the state. And so you as an analyst can factor in the returns that those projects are going to generate, but you still need to look at what those liabilities are if you're going to sort of assess the creditworthiness of the country. But anyway, she's the darling of the left, and I'm sure I'm oversimplifying her analysis. And I should say that I haven't had the chance to read the full report, and happy someone wants to send it to me and change my mind based on a full reading.
Yeah, I wonder how much she knows about Mexico. That might be the biggest drawback that she has. I hope she has seen the numbers of the Tren Maya, how much it cost, how much it's making. The same with Dos Bocas, the same with the Tren Interoceánico, which had another accident 2 days ago. So that maybe she will become less state-oriented in the case of Mexico and be more regulatory-oriented, where the government has to put in place the right incentives for the private sector to accomplish these projects and manage them in an orderly and profitable manner for the benefit of everyone. Again, I think the Plan Mexico is the right way to go. But again, from what you said, and I haven't read the report, seems like Mazzucato has good ideas. I think the state banks have to take a bigger role, but maybe financing private enterprises, not necessarily government enterprises. So I hope that she comes, analyzes Mexico carefully, and sees some of the drawbacks that the Mexican government has in operating these large projects, and learns from them. Not every country is the same, and then reaches conclusions that are more in agreement with what you said and what I think needs to be done in Mexico. Not necessarily that the state relinquishes its role as the main regulator or the main guidant or leadership of where investment should go, like many countries have done, but to be sure that they are done in an efficient, socially convenient for the country, and not just for the sake of an idea of a leader that wants something to be done because he thinks it's great. They need to be put to a test before they are implemented. So that would be my suggestion to Ms. Mazzucato.
Well, she was here last year. She saw Sheinbaum. Sheinbaum tweeted a photo of the two of them. I'm sure she's been several times since. Probably a very attractive consulting project. So some good news out of sugar. Sheinbaum herself announced that the quota of U.S. Imports of Mexican sugar has gone up from 200,000 tons to 1.15 million metric tons. So increase of 5x, I think. And obviously great for sugar cane producers in Veracruz, Jalisco, San Luis, wherever else they might be. Now, as usual, I went a little bit, tried to go a bit behind the lines. The 200,000 comparison was exceptionally low. Quite recently, Mexico has been exporting 1 million tons to the US, so it's not that different to what happened in the past. The way it works in sugar apparently is that the US sets a quota based on its needs. Its needs have grown because their own sugar production has been negatively impacted by a bunch of issues, and sugar consumption has been going up. So they raised the quota to 1 million back where it was not too long ago. But there isn't a kind of broader picture than basically the US needs Mexican sugar, and Mexico is happy to provide it. Good news, but I think Sheinbaum might have over-egged the pudding a bit when she announced it as a sign of great cooperation between the two countries, because something like this has happened before.
Yeah, I mean, I don't know if you saw that, Damian, the US also put additional tariffs on Brazil, with the exception of coffee and meat. There are elements in the American economy that are requiring these exports for us, to keep prices down as well. I mean, inflation, fortunately, it came down in June in the United States. That was great news for Trump, for his government, and for the Fed. Obviously, the Fed then was cautious, even with Walsh as the new head of the Fed, at saying we're not going to let this number bring our guard down. But it does indicate the sugar, the coffee, the beef, that there is a need in America for these products, which is good for these countries. And it does show in the larger quota that they're requiring in terms of sugar from Mexico, and the fact that they didn't put any more tariffs on coffee and beef for Brazil. Brazil is very angry with the other imports. I think it's a great announcement for Lula in his bid to be reelected, as Trump will not be very much liked by punishing Brazil. So Bolsonaro's son will be probably heading down in the polls, but we'll have to wait and see for that one, which is differently something apart. But it does indicate that the U.S. is consuming more agricultural products. Mexico has a great advantage there, so Mexico should try to use its influence as much as it can to boost its agricultural production.
And finally, from me today, speaking on July the 16th, Chipotle Mexican Grill is opening its first Mexican restaurant in Monterrey. And Monterrey, lots of people in Monterrey secretly want to be living in the United States. Makes sense that they eat a American version of Mexican food. What's more American than that? And I'm sure if they pick the right locations, Mexico's a big country, don't need many Chipotle stores between tourists and wannabe American Mexicans. I'm sure they're going to do very well. Will you be? They're going to be opening, I think, next year, the first store in Mexico City. Will you be a Chipotle fan, Eduardo, as a wannabe American Mexican?
I've been in Chipotle stores in the States. Not bad. I liked it. There are many, many options in Mexico. Depends on the price. Let's put it that way, Damian. Let's see how they price their burritos and their different products. But the quality was good, I gotta say. One item for me on last item is, and as we are wrapping up the World Cup, Oyoman, the company that owns the Azteca and the America and some of the casinos that were used to own by Televisa, was expected to sign the football team Cruz Azul as another user of the Estadio Banorte. But the negotiations fell through after Oyamandini apparently increased commissions, ticket prices, and other items. So the team was forced to look for another venue. The stadium will now only host America, also owned by Oyamandi, as I said, and Atlante, which is a team that is coming back to play in the first division of Mexico after it bought the rights to play in Mexico's top league from the Mazatlan football team, which was owned by billionaire Ricardo Salinas Pliego. So a negative, I would say, for Oyamandi.
So let's move to our interview.
Let's do so.
So it's a real pleasure to have with us today Ana Cristina Gadala-Maria. Ana Chris is a principal at QED Investors. QED Investors, as many of you will know, is probably the world's leading fintech VC investor. They've invested in some of the most successful fintechs around the world, including many in Mexico, as we're about to hear. Ana Chris is a principal at QED. She's been there 6 years. She's from Guatemala. She studied undergrad at Stanford, has an MBA from Harvard. Basically, the best CV that I've seen in a very long time. How are you, Chris?
I'm good, thanks, Damian and Eduardo. Thanks for having me. Excited to be on.
Well, thank you. So maybe, Ana Chris, we can start off if you could just walk us through some of QED's current investments in Mexico, and why, and where are you, what subsectors of fintech with a Mexico focus are you most enthusiastic about?
Yeah, absolutely. So QED, as you mentioned, is a global fintech fund. So Latin America is about 20% of what we do. We invest in the US, in Africa, in Europe, Southeast Asia. But Latin America has been one of our original markets alongside the US. So we've been investing in Mexico and Brazil primarily since 2014. For quick context, QED's DNA is from Capital One, right? Started out by Nigel Morris, one of the co-founders of Capital One. And many of the initial partners came from Capital One. And I say that because this is why fintech has made sense for us and why many of our original investments in Latin America were actually sort of patterns of Capital One. For example, Nubank was our first investment in Latin America, and it was really sort of that thread that brought us to the region, was sort of seeing the opportunity to build similar business models. So I think although, we might have come into Latin America by a bit of a coincidence by, knowing David Vélez, I think what we quickly realized was that the opportunity from a financial services perspective was humongous, right? And there was very little innovation. So if you looked at the profile of either Mexico or Brazil, or really many of the other countries in Latin America. The bank concentration, the ROEs, right? It's just all sort of concentrated into big banks. And at the same time, you have this large unbanked economy, which has been slowly changing thanks to companies like Nubank, for example. But at the end of the day, back then it was still very obvious that the first wave of digitization and of financial inclusion and of bringing people onto more modern banking infrastructure, expanding access, still hadn't really happened. And so we invested, I would say our first wave of fintech investment in Latin America was very much in sort of lending, which was our DNA, and really where we saw the opportunity as well. So, in Mexico, we have Konfío, we have Credit Justo, which is now Covalto, we have Kavak, and over the years, right, we have continued to make other investments, sort of not so much just lending anymore, but really more expansive in terms of fintech. So, those include companies like Nuevo Cargo, Fincargo, Cobre, with a big presence in Mexico now. And yeah, we have about, I think, 13 or 14 kind of Mexican-based investments, and then about 25 that have operations in Mexico. So maybe started in Brazil or Colombia and have now expanded into Mexico. So that is, I would say, why we kind of how we came into Latin America, what we have invested in. I think we continue to see, if you look at where you can invest broadly in Latin America, I think fintech is still the most exciting to us, and not just because we're fintech investors, but if you look at just broadly where VC money goes and where the opportunity is, it really is in the financial services sector. And I think it's, a couple of reasons. Some of the things I initially mentioned are still true today, right? If you look at the amount of cash that is still used, the amount of individuals that are unbanked or underbanked, and especially from like an infrastructure perspective, a financial infrastructure perspective, right? The ability to create sort of more robust financial services is still very early days. And so we see a lot of, tangible value being created by these fintechs, and partly why we continue to be excited to invest there. And I think what the work we have done in LATAM has really led us to other emerging markets as well, right? Because I think if you look at some countries in Africa and some regions in Southeast Asia, they might be a couple of years behind from Latin America, just in terms of ecosystem development and kind of where the infrastructure is. And so having seen, what can be built in regions like LATAM has led us to sort of explore other emerging markets as well. And we often kind of share those learnings across the board, given that we have sort of visibility into the different geographies. So I would say that is sort of broadly, why we're excited, kind of what we do. In terms of, you asked about subsectors in fintech, that evolves, it kind of ebbs and flows over the years, depending on, what new technologies come out, kind of what we're seeing regulatory wise, and so forth. But I would say right now, there's a lot of interest in cross-border payments from our team. So we have a couple of investments. I mentioned Cobre, Félix Pago, which I sit on the board of. They're based here in Miami, but very much of their flow goes to Mexico and is the LATAM receiver. We have Cast, which is more sort of stablecoin neobank, but very much in the cross-border volume that has volumes in LATAM as well, primarily Brazil. So very much looking into the different angles of cross-border payments, whether it be, the applications of that, like a Felix, or the infrastructure of that, which is more like stablecoin rails that is interesting to us at this point, or sort of any versions of sort of how you settle, how you move money, and kind of treasury management as well. So that is one. Two, I would say, is really these sort of B2B back office tools. I mentioned treasury, that is one aspect of it. But I think more broadly, we still see, especially for SMBs, lots of opportunity in terms of digitizing and sort of better cash management, treasury management, et cetera. I think, some of that has been hard to prove out from a unit economics perspective and just from a scale perspective. But I think largely the B2B segment and sort of tools for small and medium businesses are are interesting to us as well. And then I would not be in VC if I didn't mention AI because I do think we are focusing in AI. But for us, it really is related to fintech as well. So the overlap of AI and fintech, which to us has translated into a couple of investments, not necessarily in Latin America, but just so you have a sense of the types of things that we are excited about and that I am looking for in Latin America as well, right? Is versions on agentic payments, which is much more futuristic, not today's world, but where we think the world is heading. A company called Catena Labs. We've also invested in Zox, which is a wealth sort of AI wealth manager, and so sort of versions of that as well. Some financial modeling tools, and so forth. So I would say those broadly are sort of the horizontal themes that we're looking at, and that I think fits into the various geographies that we operate in.
Two questions before I hand over to Eduardo. One, maybe 5 years ago, a lot of the fintech seemed to be sort of focused on one or two products. And now some of those fintechs have grown into, many more products. So they're becoming much more diversified. So, Bitso, for example, which I think you're also invested in,
Yes,
started off mostly as a crypto exchange. Now it's in B2B payments. Now it's moving into stock trading, and there are lots of other examples of that. So first of all, given that you're invested in so many of these fintechs and so many of them are moving into the space of other fintechs and becoming kind of multi-product companies, does that become a challenge, assuming you accept my premise that fintechs are becoming kind of more diversified and more multi-product?
A challenge, you mean in the competitive sense of investing in fintechs?
Yeah, basically, if you're on the board of companies that are competing with each other, is that a challenge? I mean, maybe it's not. It's a question.
Yeah. So we do try. We try not to invest in direct competitors, but I think oftentimes, we tend to be early stage investors. I forgot to mention that, but we do invest sort of seed through Series B, and many times we come in at the A when you're still in product one, and you still haven't evolved into some of the different products. And at that point, it's really hard to not invest based on product roadmap because so much changes on the product roadmap as you execute that, we really invest on, of course it is, if it's a direct competitor at the moment, we don't. But I think especially in Latin America, we kind of build that assumption in of multi-product, right? Because I think that part of what makes it interesting is the lack of products, and oftentimes you need to create more than one to build a big enough company, but two, because you don't have easily accessible sort of API ready products that you can just plug in and distribute, right? So I think you need to create it yourself, and you need to get into those different products yourself, which is the case of Nubank, for example, which was kind of the original one, and now you see sort of the number of products that they have launched as well. So it does create a bit of a challenge, but I think, we coming in at early stage, it's really hard to make that call. If they do become directly competitive, we obviously manage it internally, right? So for example, we're investors in both Loft and Quinto Andar, who are now, direct competitors. But before that, when we invested, they had different theses. So yeah, I think we partly build it in terms of we know you're going to be multi-product. Two, we also know it's hard to execute, and so it's hard to know, exactly if what you say you're going to build is really going to come true, and how many pivots are going to be along the way. So we don't really, I guess, give it too much weight in terms of potential competition down the road. If that makes sense.
Absolutely. And my second question would be, I mean, in 2014, when you invested in Nu, and obviously that was a home run for you, the incumbent banks weren't especially kind of sophisticated when it came to digital operations, and that gave an opportunity for to Nu to build up its client base and be more efficient and more successful than the incumbents. But 2026 is clearly very different, right? The incumbents have all digitalized, they're all applying AI. Do you worry that the sort of the big success of the fintechs a decade ago, the Nus or the Revoluts in Europe, is going to be much more difficult to replicate now that the incumbents are much more efficient than they were, and the technology has become much more widely available, and therefore it's much less easy to disrupt than it was a decade ago.
Mm-hmm. Yes and no, I would say. So yes, in the sense of if you look at, precisely those types of models that you just described, yes, that is going to be harder. But I do think sort of two things are actually beneficial, right, for fintech and for the evolution of the industry. One is that banks are actually now much more willing to partner with the fintechs that we invest in, right? And so if you think about like selling and distribution and sort of being the infrastructure, like banks will many times build it themselves, but oftentimes want to use the best infrastructure in the market or the best product or partner with the best product. And so I think oftentimes it creates actually a distribution channel and opening for fintech companies. So we are actually seeing a lot more openness from the banks, right? Like genuine interest, whereas maybe 5, 6, 7 years ago, it was still very hard. It was banks versus fintechs, right? I think now we've come to a place where both sides kind of recognize that it's banks and fintechs are going to be working together, kind of to progress and to provide the best products out there. And then two, I also think the technology and the paradigms are changing, right? So now what we're building, so for example, the agentic payments piece, this is still very much future, but banks are not really building for agentic payments right now today, right? So I think the interesting thing is we are always investing or trying to invest kind of one step ahead of where the incumbents go, right? Like stablecoins are starting to become mainstream and adopted by banks, but I actually think that is great for the stablecoin industry and for liquidity in general, right? Like if we have massive adoption, that actually validates the technology and that creates a ton more opportunities. And I also think we're still super early, right? So I think if we're investing in, one step ahead, we are actually not necessarily competing with what exists in the market today, if that makes sense. I feel like there's always going to be something new, and that is kind of the whole point, I guess, of what we do is kind of looking for the next big thing before it becomes mainstream.
Quite interesting. And if I were a fintech, if I were the owner of a fintech, how could I raise your interest to look at me? What are the criteria that you follow in order to invest in a new company?
In Mexico or in general?
Yeah, in Mexico mainly.
In Mexico, yeah. Yeah. So I think for Mexico specifically, the challenge that VCs have today with Mexico, which I'm sure you have heard all over the place, is the exit panorama, right? Like we haven't seen much liquidity from Mexico when it comes to startups. And so I think that in general creates a challenge of underwriting, startups in Mexico. So to that point, I think we really need to believe what things excite us today and how you would get interest from a global VC is one, just the global vision as well, right? Like if you are, for example, a cross-border payments company, a company that moves sort of goods, flows from US to China, US to Korea, capitalizing on sort of these macro trends, right? Nearshoring, I haven't heard much about lately, but I do believe it still is real, right, in terms of the trade. So I think having sort of this ambitious vision, whether it does go global, I do think Mexico oftentimes is a big enough market, but I think having at the end of the day the ambition and the scope to really be a massive company is partly what we're looking for. I do think right now the technological shifts with both AI and stablecoins, specifically in financial services, is real. So anyone building in those spaces is interesting to us as well, because we think they're sort of at the forefront still of what will be a major kind of fundamental change in how money moves, and the future of money. And so I would say it's probably those two things today that catch sort of the eye of a VC looking at Mexico. Is one, can you be big enough? Like, are you global? Do you have global ambitions? Or two, are you building on the frontier of sort of these two new technologies that are going into financial services? Maybe a third would be if you have actually cracked like distribution to a certain extent, and it's a matter of sort of building the products, because I think part of the challenge to scale a fintech in Mexico is distribution, right? And so You may have seen our announcement of investing into FEMSA's. I think you guys covered it in one of your newsletters. They, through Spin, through Oxto, have massive distribution, right? And so it's a matter of, hey, how do we start distributing products that make sense for this population? Which in what we're investing in is creating a lending product, right? For them. So I think those are probably some of the things that we'd be looking for.
And if I were to ask you more granularly, do you need revenue numbers or profit margins, if there are any, because fintechs obviously lose money at the very beginning? Do you also need any metrics?
Yeah. Revenue, yes. So for us, especially because we are sort of seed through Series B, but I would say our core is more Series A and Series B. And so we very much look for revenue. I think today, if I were to give a number for a Series A, I do think we're expecting companies to be somewhere in like the 3 to 4 million in annualized revenue range. That used to be 1 million maybe 5 years ago, but today, given the speed of change, I think it's closer to 3 or 4. And for a Series B, much more than that, probably closer to 15, 20 or more. We don't look for profitability, depending obviously on the stage. The later you go, the closer you need to be to profitability, or the more direct line of sight you need to have there. But Series A, we're not looking for profitability, but we are looking for sustainable unit economics, right? Like it does need to make sense at a unit level to make sure that it scales and that it can scale. And yeah, I think growth is also what we look for, right? Like the speed of growth. So if you're growing, again, depending on how early you started. But I do think there's at least a 3x year over year is a minimum. But oftentimes we see companies that excite us are growing faster than that, right? So 5, 8, 10x are amazing growth numbers for us to see.
Fair enough. One last one from me, Ana. You mentioned about extrapolating or using emerging markets in LATAM to go to Africa. I find that fascinating. I think the world is global, despite all the elements that are going against it. We see it. I'm going to make a stupid comment, but we see it in the World Cup, how many players from different worlds play in different countries. What can you tell us a little bit about the experience of maybe Mexico, Latin America versus Africa? And how do you, I guess you tropicalize the model when you go to Africa, or you do it the other way around? But
Yeah.
what can you tell us about it?
Yeah. So I think so we have generally investment team members focused on different geographies, right? So I have historically focused on Latin America. We have a partner, Benga, focused on Africa. But our team is small. We're about 13 investment team members. And so we're constantly talking with each other. We look at deals together. And so oftentimes, we are comparing deals, hey, I'm seeing this company building in this space. Anyone seeing something similar? And then Benga will say, actually, in Africa, we've evaluated like 3 or 4 of those. Let's compare notes. And so we start to look at how different are the business models? Like, why did this not work in Africa? Do we think it can work, in Mexico or vice versa? And then oftentimes we actually have the CEOs talk to each other as well, right? To sort of gauge, hey, you're building in this space, you're building in this space. Like, what can you learn from each other? And then we also get sort of the feedback, from that in terms of what the potential is. So I think there's an organic, or maybe it's not as organic because it's intentional, but an intentional sort of pipeline formation of, hey, let's make sure we are scoping and learning what we can from each of the regions. But then also once we have invested in a company, right, we also are constantly sort of flagging it to founders and companies in other regions to make sure that they talk to them, that they share learnings, and so forth. So I would say we've probably done about 2 themes where, we have seen a theme, for example, revenue-based financing working well in Europe. And then we say, hey, this model should actually work well in Mexico as well. And so we go out and find, somebody that wants to build in that space and actually sort of like incubate the idea. So we've done maybe 2 versions of that. So it depends, right? I think we're constantly looking for the opportunities, but it very much is in our DNA to have that global scope and global mentality. And I think that partly also allows us to invest in companies that are global because we have a realistic reason and presence, right, in each of the geographies where some of these companies want to operate in. So we can help in distribution and introductions, and so forth.
You mentioned your investment in FEMSA, and that struck me as in the new FEMSA OXO spin credit business. That struck me as interesting because in many cases, not in all cases, carve-outs, kind of fintech or tech carve-outs from traditional companies haven't really worked, right? Let's take, Bineo as a carve-out of Banorte obviously didn't work out. And they don't work because of fears of cannibalization, culture, different processes. And then looking at your other investments, at least the ones in Mexico, you've mostly, and correct me if I'm wrong, invested in kind of startup tech companies, not carve-outs. Why do you think the FEMSA OXO spin carve-out is going to work when other carve-outs of traditional companies often haven't worked?
Yeah, so I would say our bread and butter is still it is tech startups, right? I think that is what we're looking for 100% of the time. But if an opportunity sort of presents itself, we are also sort of open to doing, creative investments, creative opportunities. And I think what we most look for is, hey, how can QED add value based on our expertise? Why us? Why does it make sense for us to invest? And sort of how does that potentially shift the probabilities of success here? So I think for us, and I'm not directly involved with the deal, but broad level, I would say high level, QED's expertise in building out lending products, right? The Capital One DNA, sort of it's very much in our blood to build lending products, to build consumer lending products. I think Mexico, as much consumer lending as there is, it's still greenfield in terms of people with access to credit and credit cards. And so I think it really is the combination of, hey, FEMSA is a massive platform, great brand, great distribution through their OXXO stores. The Spin product already has, a significant amount of users and volume. And so it really is about, can we build the right products for this consumer when you've already solved sort of distribution and platform to an extent. So I can't guarantee anything, right? At the end of the day, this still is a venture-like investment in that way. But I think for us, several things checked out in terms of how they were thinking about it and how the company is already structured, combined with what we can bring to the table and sort of jointly help shape the way that the company is built.
And why do you think Mexico has lagged other countries, Brazil, Colombia, Argentina, India, when it comes to fintech adoption, replacement of cash with digital payments? Is it regulation? Is it dominant incumbent banks? Is it cultural? Is it tax evasion? What's your take on why Mexico, as of today, is a laggard pretty much on every metric?
Yeah, I think there's multiple reasons, but I think if I had to pinpoint one, or the biggest driver of it would probably be regulation, and more from the perspective of why has Brazil been able to have success with Pix, right? And why have they been able to sort of digitize at a broader level? The central bank has pushed it and sort of forced it to a certain extent, right? And I don't think we have seen that with Mexico. There's some initiatives starting today, right? Like we obviously have some systems like QED, but none of them have really taken off. And I think it's more on the central bank to push it and to force it to a certain extent, right? Because at the end of the day, bottoms up can only get you so far. I think the massive adoption and the real change from a numbers and volume perspective is going to come top down. So I do think, Mexico has made some progress, but it hasn't really gone all in when it comes to regulation and actually sort of having the central bank play an important role in the rollout of some of these and in the adoption of these initiatives, right? So I mean, there's definitely a cultural component to it, but I think, Brazil was also pretty cash heavy. I think consumers, when, provided with the right tools, with the right incentives, you can change that behavior. And I think instant payments is the closest thing to cash in terms of if it actually is instant, right? And if it makes it easy to do, and if you're forced to do it as well, right? So I definitely think that is probably the biggest reason that I would point to today.
And last question on a personal front. You were brought up in Guatemala, that's correct? How did you end up as part of this 13-person team, which, despite its small size, is the most influential fintech investment fund in the world? Tell us a little bit about that journey.
Yeah, happy to. So I graduated high school in Guatemala and then came to the US for college. You mentioned I went to Stanford. And from there, I sort of went to consulting after school. Did that for a couple of years. But for me, I always wanted to do something related to Latin America and sort of come back one way or another. So I went to business school with the idea of doing more impact investing initially. So from a social impact perspective. I during business school was going to start my own fund alongside a friend and classmate there called Mosaico. We sort of graduated, started that platform. This was 2019, and really very much excited about the opportunities in Latin America, and that I think broadened our perspective of, hey, it's not just impact investing, but generally like venture investing in LATAM is quite exciting. There's not that many funds doing it. We think there's an opportunity to do it, but we really questioned whether we should build our own fund or kind of go and sort of join an existing fund. So we decided not to raise our own fund, but I loved the venture investing piece. And so I sought out funds that were doing investing. At the time I was living in DC. I moved to DC after business school, and QED is headquartered there. And so, partly through location, partly through, hey, this is one of the few funds that is doing investing in Latin America, and this is what I want to be a part of, is how I ended up joining QED in 2020 and have been there for 6 years. So you can say a combination of things, but very much driven by LATAM first and sort of the impact that I think entrepreneurship can have on actually transforming our economies in our region.
Thank you very much.
Location.
Yeah, location and opportunity.
Thank you, Ana.
Thank you so much.
That's it for this week's Mex Moves. Thanks for listening to it. We hope to have you back next week. Please share us, criticize us, comment us, and we hope to have you back in a week.